Hi everybody, welcome back to the Collections Technology Think Tank 2.0. For those of you who just joined this discussion, you've just missed a couple of really interesting panel discussions on affordability and customer engagement. They will be available post-event for you to view again, so if you missed anything, that'd be great. Just to flag up, this session, as usual, we will be taking incoming questions, so please have a look at the speech available on the left-hand side of your screen. And if possible, ask some questions throughout. That'd be really excellent. Also, we've got quite an extensive range of poll discussions, questions that we've got. So if you can join in with that, that would be fantastic. We're hoping to create a real bed of engagement from you all, but also build that in terms of some kind of white paper down the line with all these poll results. So any feedback and interaction would be fantastic. So that would be brilliant. This session, we're going to be looking at the very interesting topic of open banking in collections. The session is sponsored by Paylink Solutions. So thanks to Paylink for that. If you want to find out more about our speakers, then that's great. Have a look at the panel. Have a look at the panel on the left-hand side there, and it's got lots of options in there to read that information. We've also got a section called resources, so have a look in there. That's got information on information you can download and some details about Credit Connect. So yeah, have a look at that. But we're going to hear less from me and hand over to our panel now. And first of all, I'll hand back to our chair, who is Vanessa Northam from StepChange, who will introduce the discussion topics and our panel. So Vanessa, over to you.
Thanks very much, Colin, and welcome back to anyone that's in this for the long haul, and welcome if you're just joining us. So, yeah, absolutely, open banking in collections. We've touched on this in the last session, and if the rehearsal for this session is anything to go by, it's going to be really, really interesting. So we've got 4 speakers in this session. So what I'll do is I'll ask them all to introduce themselves and also give a bit of a reflection or a particularly pertinent insight that they've found over the last 12 months. So we'll go in order. So we will start with Owen from Bank.
Thanks, Vanessa. So as the slide says, I'm Head of Collections and Lending at JN Bank. My role is obviously to head up the collections and lending operations in a new startup challenger bank. And I guess, you know, the benefits of open banking to us are really self-evident, not only in the collections, but also the lending space as well. And interested to get into that into more detail in the discussion. In the past 12 months, so as a new bank, we're really focused on the return of investment that something like open banking can give us. As an organisation, we're actually looking to implement this initially in our underwriting space, but then perhaps utilise that same solution later down the line for collections as our volumes increase. So I think there's a real crossover there. You know, this myth that you use open banking for collection servicing or pre-funding underwriting separately. I don't think many organisations utilise it in both locations currently with a similar solution. So our experience is working with providers such as Credit Kudos, looking to implement a very cost-effective solution, a solution that comes with a ready-built dashboard, that comes with a lot of the information ready prepared for our agents. And we're in the process of building that and implementing it now.
Thanks very much. And the slides disappeared from the running order. So, right, we'll come on to Simon. Simon, over to you.
Thank you very much. I'm Simon Lyons. I'm lucky enough to work for the actual open banking implementation entity. We're the people that wrote the standards, the first one in the world to create open banking. My job is twofold. One is to grow the ecosystem, bring in banks, bring in technical providers. But the most exciting bit is the bit about industry awareness, which leads me on to sort of the short statement about what we do. My role, I'm very lucky that I get to work with people like HMRC across the UK government. I get to work with larger industry, with utilities. And the one takeaway I've got from the last 12 months is that specialization is key. Open banking doesn't fix everything, but what it does do, and in collections, I think that's very relevant as well. There are certain elements where it becomes the last piece of the Trivial Pursuit game. You get the last cheese that brings you the very up-to-date information. that gives you exactly what you need to see at that time. So if you specialize and you look into the use case of open banking, there's a great deal of value that can be delivered, not by using it in isolation, but by using it in aggregation with other solutions and maybe bringing them right up to market reference, giving them to solve the problems they face now. And the most important point is we've only just touched the top of the iceberg. I think the growth of open banking is here to come, and there's an awful lot more to be seen in the next few years and months to come.
Great stuff. So the last piece of the cheese. I like that one. So I'm going to come to Matt, and then we'll introduce Susan.
Sure, thanks, Vanessa. Matt Whale. I'm responsible for digital performance and digital collections at Hoist Finance. We're a debt purchaser with a footprint in 11 European countries, most well known in the UK by our former brand Robinson Way. We've been exploring the open banking sector at the moment with a series of pilots that we can come on to discuss shortly. Probably my biggest takeaway from the last 12 months is probably the dramatic increase in volatility of customer affordability, both positive and negative, that we've seen over the last 12 months, and trying to find ways to support those on the down, but also maximize the opportunity of those on the up. And those organizations that can do that most effectively are those that are going to come out of this in probably the best position.
Great. And by no means least, Susan.
Thanks, Vanessa. So I'm Susan Rann. I'm CEO of Paylink Solutions. I have worked in the collections industry for more than 20 years. Paylink provide an affordability application which is used by some lenders to digitize the affordability process for consumers in the early arrears. Our application uses open banking as a feature. It's not used by all of our lenders, it's not used by all of our clients, but it certainly helps speed up the process and provide accuracy in digital applications. I think for the last 12 months, the biggest observation has been the increased, everybody will know this, but the increased need to provide digital applications for those people that probably couldn't get into a bank and where the banks weren't open to be able to provide the information. So I think we had some lenders that were recording very high call abandonment rates, and our digital application was there to then help them to deal with those influx of cases.
Great. Okay, so a cracking panel. I think everybody will agree. So we've got a question already. I'm going to come on to that. So I think my opening questions are fairly low level, but I'm actually going to shoot for the big question. Is open banking really the silver bullet for collections? Who wants to start us off?
I'm more than happy to, and I think Simon was hit the nail on the head with what he said. It's not a silver bullet. It's about creating a suite of offerings. We launched a pilot about 8 or 9 months ago, which was very much about more of a product-based approach using open banking through helping customers with budgeting skills, affordability and such like, but all launched under the guise of value proposition of offering the customer the opportunity to find pockets of affordability in their budgeting, to find switching options through using those kind of providers. And I'll be very honest and I'll be very open, it fell very flat. And I think it fell very flat because we stuck it as a single product on the outside of all of our other customer journeys. And we've completely changed that approach now to look at how we embed this as part of a suite of offerings that is targeted to the customer at the right time, with the right offering, with the right solution, so it becomes part of a journey. Because what you then do is you contextualize the need for open banking to that individual. Throwing open banking to an individual and saying, there's something really swish, go play with it, is like, well, why do I need to? It needs to be contextualized for me so that it has meaning and value to the individual, and then they can use it for what they need to. So not a silver bullet, no, but used in the right place drives incredible customer and I believe business benefit as well, because you get the data harvesting off the back of it. And let's be honest, as a collections business, that's very much what our drive is. Put the customer on the hook through the value prop, but we want to harvest the data in the background at the same time. So
yes. I completely agree with that.
From Graham already. So there you go, Graham. You've got 2 questions answered in one about feeling flat and the role of AI and how that fits in. Susan, should we come to you next?
Yeah, sure. So I think I agree with Matt. It's definitely not a silver bullet. We have some of our clients that use open banking as a feature and some that don't, and we have varying levels of success at that point in the process. But I think it's more about the information that sits around it and the full affordability process and actually how you gather that information. We find the open banking transactional data is very accurate. We don't have very many consumers that make changes to the information once it's pulled back in. But where we find it coming back to the point of, is it a silver bullet? I think on its own, no, it's not. And it's about giving the consumer choice. So it's about giving them the option to pull their information through open banking, being very clear and concise about why you're asking them to do that, what they're going to get, what benefits they're going to see from the back of it, but also giving them the choice not to do it if they don't feel that they are comfortable at that point in the step.
Okay. Simon.
So I think somebody gave a perfect example of this the other day when they said that you couldn't use open banking if somebody didn't have a bank account. Whereas there is an awful lot of people that you would collect from that maybe you're in debt that can't use their bank account because it's impaired. And if you get down to a lower demographic, it does it. It's become really plainly obvious that you have to look for where your value is. And when you look for your value in any banking solution, it's generally not innovation. And a lot of my colleagues would criticize me for saying that as well. What it is about solving problems. The banking industry, which collections comes under part of it because it operates on people moving money, is riddled with problems. Now, we don't see them as that because they're legacy. So people quoting the wrong reference. People taking 3 days to settle, direct debits being represented, failures, stuff. We've got to look for the legacy things we've got, and that's where we'll see our first steps forward. So for me, it really is all about delving into the problem statements and working what the problem statements are, and then asking a very, very honest question. Does open banking fit this? But let's go a little bit further. Does API-based banking fit this? Does me interacting with my bank a different way allow me to engage with my client and get richer data? What we do with it is another matter. And it was perfectly articulated earlier where you sort of said, about training. I cannot tell you how important it is that one of the biggest problems we've got is that does the consumer not need to know about open banking and just use it in stealth mode? That's great. But if we need them to actively participate, we've got to educate them. So we've got those challenges as well. But as I say, there's an awful lot of benefits that come to it. I think when it gets negative comments is when people try to fit a round peg into a square hole. Well, unlikely we're going to buy Costa on open banking. Let me put it that way. But it's very likely we're going to do debt assessment and affordability assessments using it.
Okay. Anything to add in there, Owen?
No, I think it's been well articulated. I like Matt's point around the journey is key. Trying to shoehorn it in as this silver bullet we discussed just ultimately won't work. It's, everything in collections comes down to an engagement piece from my perspective, particularly in your tertiary and your secondary debt sectors. How you engage with customers, how you utilize an open banking solution as a replacement and also much more optimized I&E to assess affordability, to make the process more simple. How you present that, if you just take your existing process flows, functionalities, agent training, and say, right, instead of requesting a financial statement, you're now going to invite them on this link to open banking, it won't have the results that you want. You need to look at the process holistically. It will be a big piece of work for a lot of organizations, 100%, but if you don't take the time to implement it correctly, do the full impact assessment, update the customer journey, update your operational processes, train your team correctly, then it potentially will fall flat. So it's not one for the half-hearted, but when done properly, the benefits are, enormous.
Okay, so throughout the morning we've had obviously the focus of today is digital collections, but throughout the morning it's become apparent that there is going to always be the need for some consumers and at some point in the journey to speak to somebody. So how does an open banking journey fit into if a consumer chooses a telephony-based journey? How does that work? Has anybody got some insights from that perspective?
I can give you some consent perspective. So the critical point about any engagement between a buyer and seller or a customer and client, if you want to do it, so if you raise it above to a sort of philosophical level, is trust. So what we've got to do is we've got to establish trust. And generally, when you've got a manual channel, and this applies to everything outside collections as well. So, I mean, a little bit of an anecdote. On the 27th of March, the HMRC will go live with payments for open banking. So I think it's 6:15 next week. We're all on the line. I'm going to make the first CT payment for £1. I've not even got an account, and I'm going to make a payment anyway. And what they've done is they've done an awful lot of research into, how we're going to get people to understand it. So somebody rings up and says, hey, we've been applying your payment. Your reference was wrong last time. Would you try this link? And then when the trust is established on the phone, this is crucial, by the way. You can say, I've sent you a WhatsApp, I've sent you a letter, I've sent you an email, and you're establishing the trust, and you're saying, well, that person knows this is safe to use because they're in dialogue with me, their trusted fiduciary, their representative, whoever they are. And that's very important, because for 20 years, we've been encouraging people not to respond to links and not to respond to text messages. But what we're saying now is if you've got the relationship, then to use it. At that point, what we've got to do is we revert back to that thing again, education and training, and being able to articulate exactly what we're doing with our client. Can we take the client on the journey of trust with us? That's actually nothing to do with open banking. That's to do with the richness of that engagement between the buyer and the seller, as I would describe it. But for me, we're seeing that in lots of occasions. HMRC, we've got a really big use case in Just Giving. If anybody wants to make a donation, every bar about 10 Just Giving page has a pay by bank button. Doesn't say open banking. People used it and never complained. There wasn't one email of complaint about it, because they trust the brand Just Giving, because it's associated with good. So that relationship is very important for me, and trade on it for embedding any new change for them.
Yeah, I agree with that. And if I can just weigh in, I think you have to be conscious of the organisation you present, and you have to be conscious of the demographic and profile that you're inviting to go on this journey. So, for example, my organisation to Matt's would be very different in that respect. I'm in the primary collection space. These are customers that have a live contract with us. The level of engagement is much stronger. The level of trust is much stronger as well, because we've lent them the money fairly recently in some cases. So our onboarding process for open banking, our engagement piece, would need to be as extensive or work perhaps as hard as Matt would in that space. One of my agents on my team could easily take a customer on a open banking process, send them a link while on the call, perhaps, and they would probably trust that. In the debt management company space, I'm sure Matt knows more about this than me, but there are going to be more challenges based on the demographic, the profile, the trust level.
No, most definitely. And I think for me, the point you made around education, we often struggle to open a channel of dialogue with our customers, because unfortunately, and others in my industry will see this, that for too long and too often, the message is step back from debt collectors, They're only there to do you harm, and we're not. We're there to work with you to find an amicable solution. And as a result of that, opening that channel of dialogue often is quite challenging. And if we're going to get the education piece right, it's how you open that channel of dialogue to even start the education piece. Otherwise, all you have is a web page or a mobile phone screen to get across all of that messaging. And I think that for us is why placing it in the journey, as I said before, is most apt, because that is when the customer potentially is most predisposed to enter the dialogue. And I mean for this, when we look at a customer who's potentially in a situation that cannot pay the debt at that point, it's going to be much easier to open a dialogue about a solution than it is that a customer that's been paying regularly, has no arrears, is servicing the debt that we hold for them, to try and then push a product to them that they don't see that it holds any value in their current life. But I really get the point of, education is key, but where we struggle is how we get those education pieces across. And maybe it will come, as Owen's just said, as more and more of this is used in the primary space, that it becomes more and more common practice for a customer to be using it. So when they do have to encounter us in the collections and recovery space, that this is almost business as usual for them, that this is the way that we behave. But it is that challenge for us at the moment of opening the dialogue.
Yeah, Susan, from your perspective.
Yeah, so I think we obviously have various different clients that use our application. So we have some debt management providers. We also have some banks, and I think back to Owen's point, it comes back to if an agent on the phone to you is sending you a link and saying, can you download this information, you're more likely to do it because you've already telephoned the bank, and actually there is that level of trust there. We find it's much harder in that debt management space because the emotion of a client at that point in time is probably very untrusting very early on. So I think we have quite a decent agent journey where when they send the link out to the customer, actually we do get quite a decent uptake, but we have much more effective uptake through self-serve, and actually the consent piece through the self-serve journey is just easier, but it does exactly come back to the point of making sure that your agents are comfortable about talking about it, and exactly coming back to Owen's point around training. So making sure that they're comfortable talking about it with their customers, and how it works and the benefits of using it, but also the consent piece, the piece within the journey when somebody is self-serving and they get to that point, again, just why are you asking them to do this? Why should they trust this process? What is the benefit going to be? And so it is absolutely all about how we change people's mindset, really. I think for years the banks have been saying, don't open this link and don't give us your bank details, and now we're telling them to do something completely different. So yeah, completely agree with all that.
Yeah, it's been interesting, the level of mistrust that some of the book COVID appointment has come through on text, and the amount of people who've ignored it because they think it's potentially a scam and they're not going to click on the link. There's a fair bit of background noise, so if you're not speaking, would you mind putting yourself on mute? Thank you. So we touched on different parts of collections. I'd be really interested as to sort of highlight, where do we think the optimum place is for open banking in the collections journey? Has anybody got any insights on where, is it at the beginning, middle, end, throughout? Is there any particular insights, or is it too early at this stage?
I think that it's a difficult question to answer, and I think it's really going to depend on your organisation and your existing contract strategies and things like that. There's an argument to put it, for example, even in the preemptive collection space. So more and more collections functions are utilising preemptive data to identify financial difficulty before it results in a raise and struggling to engage with that customer. There's a business case there to say, right, put it before they fall into a raise, reassess their affordability, set an arrangement going forwards before they feel that it's getting too much for them. There's an argument to say, well, if you put it in your 30 to 60 days past due bracket, and you say these are the customers that are in evident financial difficulty, put it in there, reassess the payments, because that's where you're perhaps more likely to get a return, because perhaps the payments aren't affordable at that point and you've evidenced it. There's an argument to say, put it at the end in your 90 days past due bucket, where, we've tried everything to engage with these customers. Let's try to, again, reassess their affordability, engage with them, say we don't expect you to pay something you can't afford. I think realistically, if at any point in the journey that you're looking to assess a customer's affordability and assess how much they can pay, which for any good collections agency should be all the time, if they're in arrears, you should be always wanting to engage with them, understand what they can pay, work with them for that solution. I think realistically, there's benefits throughout the whole journey. I would look to implement it par for the course. So at any point you want to, assess somebody's financial situation, their ability to repay, that would be a great place to put in open banking. So throughout the collection cycle, in my view.
And I think I echo that. We're very fortunate. We've just deployed the FICO Blaze product, which drives all of our customer communications at the moment, which means we've got fully dynamic contact strategies. And through the reactive treatments that's allowing us to deploy, we can drive out a tool such as this completely independent of the strategy and completely driven by the customer's engagement with us and their ever-changing situation. So where you notice that a customer may have made a change to their affordability statement, we can be driving this. Where a customer may have missed a series of payments over a series of time that makes them fit a certain criteria, we can drive this product too. So it allows us to be very, very reactive. And I think that's where it becomes important, because I know you're going to sound like a broken record with this, but it has to have context to the customer's current situation. if they're going to jump on the hook with this, because just chucking them something that says open banking, that means nothing to our customer base. I think Simon said it before, it's got to be something that has meaning on its own. Used in isolation, it's just technology. And I think at times we're all a little bit guilty of being a bit of a magpie and going, oh, this is the new shiny thing, let's deploy some innovation here, where innovation isn't needed. What we need is a simple solution to a problem a customer faces, which gives them that instant solution that they're looking for. They don't want something long and arbitrary. So it's finding a way to embed it into that situation to give it that context.
Great. Susan, Simon, anything to add?
Sorry.
I'd put one thing in. Sorry, Susan, I was just hanging on for you there. The 670 million API calls last month in a 28-day month, every one of those was a balance check on a bank account. You can have 4 a day. That's the maximum open banking. There's 20 working days in February. So we're getting onto the region, if my maths are right, of, an awful lot of people are getting 150, 160 million people are using it monthly. Most of them don't know. They've given consent, and they've fully given consent to their partner. And that to me is such a powerful statement, because to the point, comments there before, it's stealth use, and that's where the value comes in. They're trusting you to do it. Crucial. Sorry, Susan, I spoke over you. Apologies.
No, it's fine. No. I was just going to add, Vanessa. I think certainly for the right part of the process, we have more success with clients that use it in early arrears than later arrears, and I think that's just because once a consumer gets that far down the road, they're probably less likely to engage anyway with the bank and the agent. So yeah, certainly we would suggest using it in early arrears.
Okay. We've had a question come in from Steve Murray from Ardent Credit Services. So for a DCA, here's a $64 million question. What would the cost benefit analysis look like of integrating open banking?
Depends on your customer base.
Okay.
You've got a customer base that a lot of low balances, a lot of individuals, to Simon's point before, that don't have a bank account, that live very much in a cash-driven culture. Your cost benefit there is probably going to be very, very low. And this is the key with any innovation. Understand your customer base first, and make sure that wherever you're looking to drive innovation, it is driven reflecting the needs of your customer base. Otherwise, you're putting a Lamborghini engine in a Mini for no reason, or you're doing the other way. So understand your customer base first, and then you can understand the benefit that it will drive to you. And then you can do any cost-based analysis on cost efficiency, profitability, whatever you want to do there, that can come as a result. But start for a point of understanding what your customer base is first and what those debt portfolios look like. Yeah, I agree with that. I think as well from a DCS space, if you receive caseloads of files, 1,000, for example, if they're specific to a specific lender or a specific product type, you can perhaps, make a stronger case for that. For example, if you take on a book of 10,000 new day credit card Amazon accounts that are used to engaging digitally, that took out the credit card because of the incentive for shopping with Amazon, they're probably going to be more likely to engage than if you took on a book of 10,000 Debenhams credit cards, for example. So you might even want to diversify it further. So by portfolio, because don't forget, obviously there is the cost for the transaction. So you've got the implementation cost once the functionality's in. You obviously want to make more from it than you're spending on the cost of the transaction. If you're looking at a legacy debtor Bank of Scotland loans, where the average age is 65, perhaps, probably not going to have a good return of investment there. But Amazon credit cards, average age 35, you probably get a better uptake. So I think just echoing Mac's point, just really understand what does your customer look like. And, in the DCS space, you're at better place than most to do that because of the way files are received and through your different clients and the different products they provide.
Yeah, sorry, I was just going to just add to that. So to Matt's point about actually understanding your customer. So when we went down this journey of building a digital affordability application, with going back 6-7 years ago now. That was one of the first things that we did, is that we went out to consumers and said, how many people want to continue a digital journey from the point that you hit a website? And we had, it was something like 65% at the time, which surprised us, because at that point in time we didn't expect it to be that high. And I think it's definitely understanding what your cohorts of customers are, who wants to engage with you in all the different ways, and then building a self-serve journey for those, providing a self-serve journey for those consumers that want to continue to engage in that way. But certainly a self-serve journey, we see a huge reduction in just that heavy lifting that a digital application can provide, and open banking is obviously an integral part of that. So if you can take away that agent cost of somebody actually just sitting on the phone and gathering that information, and get to the point where the advice that's given actually is the only agent interaction time, there is a huge cost benefit there.
Thank you. Okay, we've got another question. So this is from Andrew Garner from Inicio. So how do you overcome the challenge of ownership with open banking? Our user research found engagement is sub 8%, with themes such as, you know more about me than my family does, and that it doesn't reflect my outgoings, and I will use cash to hide. So could it drive disengagement more broadly by pushing it? Susan, do you want to start with some of your insights?
Yeah, I think so. So we certainly, so in terms of categorization, and there is always this question around sort of what you do with cash. We actually don't categorize within our application. We don't categorize things like that. So we only generally tend to bring in fixed costs, and then we try to engage with the consumer afterwards to say, what do you do with the rest of these transactions that come through monthly, and try to do it in a way where we're sort of bringing them into the journey. So we're allowing them that point in time where they can effectively sort of say, what do I do with my cash every month, aside from all of the fixed costs. So I think it's definitely, it's just about continuing to make sure that throughout the whole journey you continue to engage with consumers in the right way, and make sure that they feel like they're part of the process, without a doubt.
And back to this 8%. So in a previous role, I worked in an open banking startup, and we were focused on debt advice as well. And some of the conversion rates surprised us in the early days. Where is it sort of, and I know this is it depends on the user case, but where are confidence levels in terms of that conversion rate, that consent? What are you seeing?
So we see in our application about 60% uptake for people that have open banking as a feature. And where they actually consent to provide their transactional data through the open banking consent, we then only get about 70% make changes to the transactional data that then comes in, but only to about 10% of the budget. So it's a very small amount of data that's changed once they've consented to open banking, and the consent rate actually is quite high. But it does all come back to why you're asking somebody to provide that information, and providing comfort that they're doing the right thing and that they can trust you.
Matt, what are you seeing at Hoist?
I was going to default to Simon, actually. So,
Come on, Simon.
Just need his view.
Right. I'm going to give you an example first of all. You don't buy a house on a credit card, and you can't get a mortgage if you print out your ATM balance. So we do have to get into use cases. So I'll give you some numbers. For a national campaign that launched within 3 days, for people making, I'm not going to say why, payments below the value of £60, there was 6% of people that used it with no advertising, no education, nothing whatsoever. In a case where the method of payment was clunky. The journey was wrong. Obviously, I'm not talking about debt now. There was over a 70% uptake for it as well. There has been one case where there's been a 0% uptake, but it boils back down to, I'm sorry, it's a broken record, and Susan's words are just incredible for me. It's education, buyer, seller trust, and how do you engage your audience to go and use it? There will always be a population. I worked in the co-op bank for years. I built a social banking platform that was used by appointeeship accounts and by deputies and court protection and stuff. So there's always a population that won't engage because they want to live outside of that arena. That's why companies like PayPoint and AllPay exist with the barcodes, and Payzone. They're on cash. They're doing it. We can't judge the uptake of a product by people who are already digitally excluded. I'll tell you one really important factor. In the past, to get a payment instrument to people that was easy, you had to have some kind of credit. To have a debit card or to have front of wallet plastic in this country, you have to have a decent credit rating, because you can't get a current account with one. Now then, everybody can get a bank account. So what we can actually say is now there's only 2 reasons why people cannot use open banking or give the consent to access their data. One is digitally excluded because they've not got access to the internet. And the second one is choice. So we've got a journey here to go on to be able to educate people. And a 60% take up just goes to prove that when the education is right. I mean, I'm coming around to your house. That's just the greatest story I've heard since I've been in open banking. The education is so important about this. We can't treat it as binary, but I hope that helps. I can give you other numbers if you want. 670 million API calls, 28-day month, which was up from 185 million last month. We increased our payment volumes by just over 400% in the last month. Obviously, percentage is very misleading. It's now running at well over 7 figures. Payments people are much more reticent to do. Your UK government has got mandatory use in their debt resolution framework. There was a name mentioned earlier who I've met with. They have mandated you have to use open banking, but it won't apply to every case, and it won't apply to all cases. It won't apply to some cases. It's very much about getting them on board. We've got to educate people. It's brand new. We've got to.
I could not agree more. And the pilot that we ran, driven out to 10,000 customers, that I said fell very, very flat because I made the very daft decision to drive out the pilot to 10,000 of our well-established paying customers who didn't need the product. They are well-established paying, and funnily enough, there was 0 uptake.
Fixing a problem that isn't there.
It's exactly. And I stepped back and thought, I'm a very well-paid idiot in the room right now, but it was true. And it's about stepping back from that and looking and saying, no, it's got to be targeted at those that require it. Because you can find a use case for it failing and you can find a use case for it succeeding, but was the applicability of what you provided each use case actually appropriate? And if it's not, then it's the elephant in the room. Of course it's going to fail. It was doomed to it.
Can I give you one more anecdote as well? And this is a P45 statement for me. I work for open banking. I've been incredibly lucky to do what I've done. And did I think it'd go this well? No, it's been ludicrous. So, timing is everything in this life. It's been more successful when people haven't called it open banking and they've badged it as a service of a trusted provider. Right now,
I talk about this a lot, that it could, in terms of marketing, it couldn't be given a worse name, because the minute we say open banking, everybody goes, whoa, I'm not being open about my banking. And you're trying to drive that out. So it's not great.
No.
But then again, I thought a great use case you used before was on Just Giving, where it's pay by bank. And we just need to be clever. It's not deceitful. It's clever in how we approach this with our customers, to present it, to contextualize it, to offer it, to drive adoption. It's, these are the simple steps that we need to go through and just look at it and not just go open banking, silver bullet. Oh, it's innovation. It has to work because it's digital. And that's not innovation.
No. And I think one of the questions that we'll come on to is about sort of the mass adoption. If you compare it to other very consumer-facing innovations, so if we, I was back at Capital One when chip and PIN came in, and we've now moved to contactless and all the concerns that people had, and we're now talking about contactless being £100 threshold. It was a single user case, and it was a single brand. And the challenge, I think, with open banking is it's the plumbing of which you then overlay some amazing user cases, and I guess to Simon is where's going to be this tipping point? Where's this going to how are OBIE sort of predicting? And I know it's a tough question, but
it's not.
The more it's used, the more it is.
Can I get on my soapbox for a minute?
Go for it.
Contactless was launched and every transaction was not authorized. The moment that contactless give as the exceptional moment is the TFL moment. So they say that when contactless was used there, but actually if you look at that moment, what happened and changed in contactless was crucial was every transaction is online authorized. So liability is a critical word. I'm a banker. That's my background. Liability is absolutely crucial. If you were collecting debt where people said they were going to pay and you added it to the ledger, you wouldn't do that because you don't do it unless you receive the payment. So we have to have that level of trust. Now, the TFL moment, what it did was it traded on a technology that we could identify the person using the credit card contactless, and then we could take the money at the end of the day. And they're actually looking at open banking at the moment. So I'll give you the example. Wouldn't it be great if you could go in, scan a barcode on a ticket machine, and then pay by open banking at the end of the day for the journeys you've made, because you could be identified by your debit card going through, but then you could collect the payment by open banking and you wouldn't get the debit card fees. So again, we've got that. The TFL moment, next Wednesday. I have worked incredibly hard to be able to make open banking available to the fiscal services. I'm obsessed by user journey. I'm obsessed by education, and I'm obsessed by almost making it not known in some cases that solve the problems there to exist. Next week, we're going to take it for our HMRC's 4 biggest products: corporation tax, self-assessment, VAT, and PAYE. Post that, we can then look at benefit overpayments. We can look at passport applications where we use the account for ID. We can look at it for, I nearly said something I shouldn't. We can look at it for certain other transactions, which will be in there. The moment will be next week when it's got fiscal uses. I'm old enough to have launched faster payments in 2009, sitting there in front of a treasurer, begging them to use faster payments for 20p instead of using chaps for 22 quid for a £15 payment. It comes back to education again as well. But next week we have trust. We have a badge that says HMRC uses open banking, and I'm delighted. Now, when they do that, if you think about it, as soon as people start seeing the trust of government doing it, and then they can pay their council tax by using open banking, or they can scan a barcode on the phone and they don't have to go to the post office to go and pay on a barcode, or they don't need to use Payzone, or they don't need to go to use the slip that they're paying in at the moment to pay the TV license, or they can top up electricity meter doing it. We're educating people into that process. Now, you'll notice all the things I've talked about there are probably client behaviours of people who could be in collections or a higher demographic. Because the thing is they're the inefficient payment methods. So we've got to start where the value is, and the value is in constricted, inefficient, expensive, long payment methods. If we had a drink 20 years ago, I know we all still would have been at school, and we said it's going to take 3 days in 20 years to settle a credit card payment, and it's going to take 7 days to reissue a failed direct debit. Well, that's where we are. And the only thing I've seen that changes it is accurate push payments. And that's what open banking provides. The shoebox, bank statements for businesses. There's 110 million statements going to zero last month as well. We've solved the problem of the shoebox with receipts. So we're starting the journey, we're going out. And for me, that's where it comes from. Pick the use cases, pick the problems to solve, and educate. Maybe don't call it open banking. We're going to call it closed secure banking after this. I'm going to go for a name change.
Okay, thank you, Simon. Well and truly on your metaphorical soapbox.
Sorry.
No. It's great to have passion about a subject. So let's just bring it back to collections. So if we think about the landscape within the pandemic and some of the further guidance in the FCA, let's talk about vulnerable consumers. And not about an amorphous mass of vulnerable consumers. What are the opportunities in helping vulnerable consumers? But what are the risks? And I just open that up to anyone who wants to contribute on that.
Yeah, I'll jump on that one if I may. I engage quite a lot with the vulnerability workspace, with the FCA vulnerability working groups and things like that. And the changing face of vulnerability during the pandemic has really been quite concerning. The forbearance businesses and banks offer has changed considerably. It's a new world of vulnerability. The updated guidance was recently introduced as well. So if vulnerability isn't at the forefront of a lender or a bank's mind or a debt collection agency's mind, it really should be in this day and age. I think the advantages open banking gives you with regards to vulnerability are, there's several of them. I particularly like if you can keep a live connection on open banking. So for those that aren't aware of that, it doesn't have to be just a single connection, a single snapshot. You can actually keep a live connection that refreshes every 6 months with the customer's consent. Now that really helps you to ensure that any payment arrangement is suitable and affordable, particularly from a vulnerability space. It does add an element of care there, but also allows you to tailor the payments to suit their affordability at the time. For example, you can quickly respond to any signs of financial distress. You can ensure that if you're collecting a direct debit, that you're not going to put them in undue financial difficulty. I think from an engagement perspective, so, trying to complete a old style INE over the phone with a vulnerable customer might not be the easiest thing in the world. It's not usually the best outcome. This gives you an unabridged, fairly convenient view of their finances without putting them through perhaps a difficult conversation. And then, if we go into the debt management space, for example, if a debt management company takes over the accounts, whatever it may be, I think it allows a greater level of communication there. One of the things that we struggle with, particularly with debt management companies, is ensuring that the arrangements are fair and ensuring that they're the right arrangements, given, particularly vulnerable customers as well. And it does enable that additional level of control and visibility. So I think ease of engagement, ensuring the arrangement is the right one, making the process as simple as possible. All the benefits you get with, other customers, but probably quantified in terms of your vulnerable customers there.
Thanks.
Yeah. So if I could just add to that, so because obviously we see consumers in various different sorts of spaces, so from debt advice right and through to arrears. I think where and just coming back to Owen's point around one-time consent on open banking, because it is very backward facing, it doesn't necessarily pull out some of those triggers that when you're giving debt advice might be an alert to somebody who's in a vulnerable situation. So it wouldn't necessarily highlight people that aren't feeding their children or have switched off their heating. And I think, in that one-time consent situation is probably not the ideal to see what's actually currently going on now. And I just don't think you can replicate that even through a full digital process. And it's around, you've got to have that advisor interaction to be able to pull that information out. So whilst I think it's valuable in that it can highlight some things that may trigger something in the future, but that backward facing look, I think just back to your point around if you could do in areas where you can do that reoccurring consent, there is certainly some things that you could pull out that which would trigger vulnerability. So we have insights around furlough, people that may have been on furlough, people that may have been spending money gambling, where loan payments may have stopped. And actually, I think that can then trigger something that may cause somebody some hardship further down the line. And actually, in that case, it's quite good. So, yeah.
Great. I think it's always important as well. So we talk about this isn't the silver bullet, combining it with the operational resource and functionality as well, so you can act on these things. So if there is a financial difficulty trigger via the open banking link and you see something, you need to ensure that your operation is set up to deal with that. You need to make sure that you have a suitable outbound contact strategy campaign. You need to ensure that your FTE requirement is spot on to take these inbound calls. It increases the need for a flexible operation, and then it brings in separate discussions about how we're responding to working from home and moving our offshore contacts operations back onshore and things like that. But the deeper you go into this, the more benefits, but then there are the more things you need to consider. The worst thing you can do is set somebody up for a fall, vulnerable customer. You've gone by the open banking link, you've identified financial difficulty, but then you've done nothing about it. Either have really robust automated processes to say, right, we're going to lower your monthly payment, or ensure that you have the capacity to contact that customer, have the conversation with them when you needed to. So just making sure you've got all the bits of the jigsaw, really.
Great. Okay. I think we could probably carry on for at least another hour, but we haven't got another hour. So we are running slightly close to the end time, but I do want to just invite the panelists to just give their their prediction over the next 12 months could be related to open banking, more broadly about collections. So I'm going to start with Simon.
Relating to this subject, there will be a credit rating governed by bank account behaviour, not just rating on monthly behaviour on cards, on businesses, on P&L. There will be one rated on bank behaviour.
Wow, great. Thank you. Who wants to go next? Can anyone top that?
I was just thinking, I should have asked Simon last.
Oh, yeah, sorry.
It was a guess.
So my prediction would be that en masse uptake will not happen until it is more comfortable and more implemented in the lending space. I think the next generation of borrowers to become used to open banking, if that's how they've had their affordability assessed via the actual loan or product or whatever it may be. And I'm just talking in, more the loan and mortgage space and things like that rather than transactional. But I think that will be the precursor to a greater uptake in collections as consumers will be more used to it.
Great, thanks, Owen.
Yeah.
Susan.
So I think, the next 12 months is without a doubt, we are going to see much more reliance upon digital applications. Open banking will be part of that. Consumers, I think, will just naturally come round to open banking. It drives a lot of what we do now without people actually realising it. And I think the uptake will start to slowly increase. But the reliance on digital platforms is not going to go away. The last 12 months has taught us actually that more and more people will start to move towards digital where it is appropriate for them. And I think the next 12 months, we're just going to see that increase more and more.
Thank you. And finally, Matt.
I predict I'll probably be back on another one of these talking about one of my pilots that has fallen flat, where I haven't listened to my own advice. No, I'm hoping the future tells me that I might be back on one of these telling people that I've done something that's gone well. No, I think that we'll definitely see it becoming an embedded part of general practice in a collections life cycle in some way, shape or form, whether that is the ability to identify affordability, whether that is just through a sense of added customer benefit and not linked directly to collections, or whether it's through some kind of stealth data harvesting process to allow us to better segment our customers for targeting for our communication strategies moving forward. But I think that the smart ones amongst us will find a way to intertwine it with the way that we engage with our customers on a daily basis.
Great, thank you so much. Absolutely fascinating insights, and I can't wait for this conversation in 12 months' time, and Simon's out of a job because everybody's using open banking. I'll hand back now to Colin.
Hi, thanks, Vanessa. Yeah, no, really great, really interesting. We've gone over on this, but that's not a problem. I just apologise for people who joined our next session and want a quick lunch. But yeah, no, fantastic, really interesting, great insights from all three of our speakers. That's what we thought we'd all bring to it. It's been fantastic. And what I find from these sessions is I learn a lot myself. Obviously, I'm not on the side that you guys are on, but it's good to have these different views and really understand where we're going in the future with this. And I always think that the generations and the way they are and plugged into technology now will hopefully create a natural progression anyway for these kind of initiatives and the future of technology generally. So I'll round up. Thanks for Vanessa, of course. We'll see you again shortly. We're working very hard today on our next session, which is going to be on business transformation, which takes place at 1:05. As explained in our previous sessions, you need to log in and log out, unfortunately, to join that, but that'd be great. That should be a good session. And then finally, round up. Thanks, Owen, Matt, Simon and Susan for that. That was fantastic. Really good insight in this session. I'll round up and thank everybody who's tuned in, took part in our extensive survey as well on open banking. We hope to get some good results as a result of everybody's input. So thanks for that. And I'll end obviously by saying goodbye. So thanks a lot, everybody. Cheers.
Thank you.
Bye.
Thanks.
Thank you.
Bye.
Bye.
Bye.